All right, I'd like to welcome everybody to the MIOYM Blueprint. And this is a strategic approach to residential equity. Now, my name is Robert Costomiris. I am the president of MIOYM Equities. And today we're pulling back the curtain on how we identify, acquire, and exit high velocity real estate deals. Just give you a high level overview. What we're covering today is who we are. It's our history and 25 plus years of industry experience, what we do, the high velocity niche of distressed residential assets, our proprietary technology, how we use automation to dominate the acquisition process, what the value add is, our specific formula for property rehabilitation, deal analysis, how we ensure we never overpay, construction, managing the risk with national boots on the ground network, and an exit strategy, turning the assets into liquid capital within 12 months. Plus, what you guys all want to hear is the investor returns, a breakdown of how you, the investor, make money fee-free. And we try to give you a couple I give you a property example, which is a walkthrough of a recent successful project. And then also one of the biggest things that I think of is the tax advantage investing. How to utilize your IRA to fund these opportunities. Whether you're looking to, invest with us with cash, which is just, money you have in your bank account, or through qualified funds, which is your IRA account. We give you the opportunity to do both. And investing in your IRA, I'll get into it later, but it gives you tax deferral and you don't have to worry about taxes, and the interest we pay you is what you get. Now, just to start with a little disclaimer before we begin, to please note that this presentation is for informational purposes only. It does not constitute an offer to sell or solicitation of an offer to buy any securities. All investments are made solely pursuant to our official term sheet and subscription agreement. And just so everybody has it, so in case you don't know, we deal with accredited investors. And typically this refers to an individual with a net worth exceeding $1 million, excluding your primary residence, or sustained annual income of at least 200,000 or 300,000 jointly with a spouse. If you have any questions about that, I could gladly answer it, or you could just pop it into the chat and I'll get to it at some point. I want to start off by introducing MIOYM Equities. We are a private equity firm specializing in high velocity niche. Now, what we do is we acquire and rehab distressed single family residential properties across 36 different states, mainly in metro areas. Now, we focus on undervalued assets in urban hubs, avoiding rural markets just to ensure liquidity. Now, we are not new to this space. MIOYM has been operational for over 15 years, just the company itself. It was launched in the wake of the 2008 financial crisis. Our CEO, Mark Cox, has been active in the real estate since 1999, overseeing the acquisition and sale of more than 600 properties. He actually started off in Baltimore doing row houses, back in obviously 1999. I myself, Robert Costomiris, I bring 20 years of experience as a financial advisor to this firm, including 9 years managing a boutique securities firm. This combination of real estate acquisition expertise and disciplined financial management has allowed us to deliver consistent results. Historically, our investor return on investment has ranged anywhere between 15 and 36%. The 36% was back, before the company started, and probably in the early stages of the company when we were just trying to get off the ground. Now, our strategy relies on capturing deep market discounts, often 60% below market value, or if you will, 40 cents on the dollar. Now, to find these deals at scale across the 36 states, we use a proprietary technology stack designed by my business partner, Mark Cox, the founder of MIOYM. Now, I'm going to do something a little bit different. I didn't even discuss this with Mark, nor is it approved or anything like that, but I'm going to go off script here and show you the system live and in effect. And I don't know what we're going to see here, but you're going to see it checking for properties. I do have it up. I don't know what is going on with it. Here it is, the deal finder. I am going to share that screen with you now. Please hold while I pull that up. And I want you to see how we actually find deals. Now, I believe you can see my screen here. And what you'll see is we're looking at, and I'm not looking at the camera. I apologize. I'm looking at the screen over here, which I will bring it over here. And just to give you an idea is we're looking at a total properties. This is what it's screening right now. 110, oh, Jesus Christ, I'm wrong. 1.1 million properties. There's some deals that we're looking at is 1,142. And then the rest that are not deals or ones we wouldn't look at are, 1.1 million. As you see here, it's 8357. I'm not going to go through all these. Northwest 25th Street, Sunrise, Florida, 425,000 listing price. 80% of that is 340,000. That's generally what the bank will give us. That's what we need to know that for. AMV, after market value, is what we try to say that the property will be worth if we go in and do some properties. This looks like it's a pretty decent one, is $4 million. So this one looks like it's a pretty decent one. And then we put in an offer at 340,000. Let's keep our fingers crossed, and so on and so on. You can see how the different deals work here. It's scrolling down, and Mark's probably going to kill me for showing you all this, but I want you guys to see how many different deals that we're looking at on a daily basis. You can see here we have deal status, all addresses, checkup, privy data, Zillow properties, HUD Fetcher, Fannie Mae, Redfin, all the different data that we go through. And this is all utilized in our deal finder and what it is that we're looking for on a daily basis. So hopefully Mark doesn't freak out when he hears that I put that up there, or if he's on the call itself. Let's share this screen again. All right. Now, one thing, I didn't share. Hold on. Stay with me. Stay with me. Stay with me. All right. Now, that's basically how our proprietary technology works. And I'm going to give you a high-level overview. Basically, what we're doing is we're taking deals, we're putting guardrails on it, and we're saying we only want properties in this area at this price point range with this many bathrooms and this many bedrooms. The same as when you were looking for a house or apartment or whatever it was you were looking for when you were buying your property. We do the same exact thing, but on a much higher level. And then we also put offer prices in there, and it sends out the offers itself. When it sends out the offer, it also sends it to our analyst desk, and they oversee it, make sure it was a good offer. If it is a good offer, they continue with it. If it's a bad offer or it's something that doesn't fall within our buy box, they'll pull back that offer. Now, buying right is only half the battle. Buying is one of the biggest points in any investment you make, whether it's stocks, bonds, mutual funds, real estate. Getting in at the right price is the most important thing, but it really is in real estate only half the battle. We actually manage a national boots on the ground network of vetted contractors who upload construction reports, including scopes of work and progress photos in real time. Now, let me go to that slide. I apologize for going. So here's a construction report you'll see over here. It gives you just the general idea of what we're doing, structural issues, whole house financial clean, mold present, trash takeout, gives you the prices and everything. We actually have a way, they give us their scope of work. We plug it into our program, and it tells us how much we should pay in each area. So let's say a 2x4, we're located in Westchester, New York, will cost X amount of dollars. But in Chicago, it'll cost X, and in Dallas, Texas, it'll cost X amount of dollars. And it'll also tell us how much it'll put in there. We put that, we send it back to the contractors, and we come up. We try to negotiate a different price with them, and obviously we look for the lowest price, but we don't always get what we want. So we try to mitigate the risk through a fixed cost approach to renovations, like I was just explaining to you. Standardizing items like roofing, flooring, and structural repairs. Our average turnaround time from acquisition to retail ready is 90 days. So now let's go to, there we go. Each property is isolated in its own LLC. God forbid something happens, we're into that LLC, and it only happens within that LLC, and it doesn't spill over into other investments that we have. We actually leverage institutional relationships where lenders fund us 85 to 90% of the purchase and 100% of the renovation costs. Now, we look for equity partners to cover the final 10 to 15% of the acquisition that the lenders don't cover, legal fees, closing costs, and any carrying costs that may come up to. And that's where the investment comes from, and that's what the equity covers. And then that's where we go from there. What we look to do is we look to get this closed out in a 12-month time frame. Our target is always a 12-month exit. Now, once the property, let me go to a different slide. I apologize for that. Once the property is sold, the debt is repaid and you receive your equity back plus a 15% return. And here's the one kicker that a lot of people don't understand. It's 100% fee free. We don't charge a management fee. We don't charge construction costs. We don't charge anything like that. It's free of all fees. You get 15% due back to you, whatever your investment amount is, solely because we are the operator and we're putting the deal together. And once the debt is paid, once you make your money, we get everything above and beyond that. And to ensure we hit these timelines, we utilize a two-part exit strategy to get assets sold. And this is, aside from our proprietary technology, this is what sets us apart from other offerings, other operators. The way that we do it is we list with a local realtor, and obviously they're going in there and they're, prettying up the property, setting it up with furniture or doing an AI, overhaul of the property, make it look nice. This way they can capture, the standard retail marketplace. The one thing that does set us apart is our affordable homes department. Simultaneously, and the realtors all know this, we market the property to first-time home buyers. And what we're doing there is we're offering them a way to be able to buy a property in two monthly payment bridge, or the monthly payment bridge. I'm sorry. We provide opportunities for buyers to own a home for the same monthly payment they would otherwise spend on rent. The way we do it is we introduce these buyers to an FHA lender and offer a down payment assistance so they can achieve home ownership for the same cost that they could expect for the rental. Now, we also, like I said, we also ourselves offer down payment assistance. So let's say that on an FHA loan, it's a 3.5% down payment. We'll pay to $8, $10, $15, $20,000 for them to be able to get into the home, and that they're only paying whatever they were expecting to pay in the rent. So if the rent's $2,300, $1,500, I'm making this up. Obviously, we make sure that their mortgage is never more than that payment for that property. Now it's got to be, fitting for that property, but that's exactly how we do it. So we have the proprietary technology that speeds up the deals, and then we also have the two-part exit: the realtor, and then also the affordable homes, getting first-time home buyers in on these projects. Now, our goal is to acquire these properties at a 60% discount to market value. Like I said, we use the proprietary technology designed by Mark Cox that helps us identify these distressed, undervalued homes in these markets. Once we acquire a property, we renovate it to increase its market value. And then institutional lenders, as I said, give us the 85 to 90% of the purchase price and 100% of the renovation cost. And then obviously the investment includes the 10 to 15% of the acquisition, closing costs, legal fees, and carrying costs. And then once the property is sold, debt is repaid in 15%. Now, here's the kicker. The best part about this is, aside from what we do, is the fact that since I have come into the company, I have set up the fact that you can invest with it, tax-deferred money, or invest within an IRA. We have relationships with 5 different companies where they're self-directed IRA companies. Now, these are different than your Fidelities, the Merrill Lynch, Morgan Stanleys, things like that. They allow you to invest in alternative investments such as gold, silver, crypto, real estate. You could actually lend money out through these companies as long as it's set up properly. And then this way, all your money is deferred via taxes, or your taxes are deferred. So whatever money you're making, you're not paying taxes on right away. And a lot of times, many investors don't realize that they can participate using tax-deferred money through self-directed IRA. Now, like I said, there's tax-deferred growth, and your returns grow without immediate taxation. You have diversification, because now I am a huge fan of, investing within the markets and diversifying within the markets. But just like a lot of big time hedge fund guys say, you have to have about 12 to 13 different alternatives in your portfolio. And depending on the size, that might not be possible, but you should have a significant amount of alternatives in your portfolio so you don't feel the full fluctuations of the stock market. This gives you the ability to move retirement funds out of the public markets and into tangible real estate. Now, this is also giving you compounding returns, reinvesting high velocity returns with a tax advantage shell. Like I said, we've established relationships with Equity Trust, the Entrust Group, and Heritage Group, are just to name a few. And I've personally worked with many more providers that we don't actually have formal relationships with. So I could likely accommodate your current custodian, assuming it's not a Morgan Stanley or Merrill Lynch. But I will always try my best to try and work with them if I can. Now, to summarize, we find these deals at a 60% discount using our proprietary technology. We renovate it in 90 days and exit within a 12-month time frame to provide a 15% fee-free return. And I would love to open the door now for questions. If you wanted to just put your question in the chat, or you could just take yourself off mute and ask the question. I'll be more than happy to answer any and all questions that you may have.
Yeah, hi Rob. This is Jeff Weiner.
What's up, Jeff?
How are you? You
Good.
mentioned a 50% return. Currently, are you at the 15%? Are you over? Are you under? What's your perception of the near future?
No, we're at the 15% currently.
So that's the lot that's pretty much locked in, then you're saying.
Yeah, and it's an annualized rate, which I didn't say. So if we
Yeah.
go over the 12%, you're going to get, whatever time frame you were in it. And again, if you're under the 12 months, you're going to get the prorated 15%, but it's always a 15% annualized rate.
And you mentioned that from acquisition to retail ready typically is 90 days. Is
Assuming
that
we don't, but yes, but assuming we don't have any delays in permitting, closing, or anything like that, yeah, we anticipate it being 90 days.
so would that mean that if if I'm investing or people I represent invest, that how soon would if we said to you today, how soon would money be placed in a particular LLC?
Oh, that's a different question.
Yeah.
From the time they invest, let's say that we don't have, let's get a worst case scenario first. If we don't have any properties and they commit to a certain dollar amount, we have 90 days to invest said money. And then your money will start compounding once we close on a property. Now, what has been more recent is we've had a plethora of properties, and I kind of, as the capital raising department, have been having not issues, but I've been being strangled by the amount of properties we've been getting, and I can't even keep up with them. So if we have a property, as soon as you invest, it'll go right into the property.
Okay. Very good. Thank you.
Yes, yes. Do we have any other questions, comments,
Yeah,
concerns?
Robert, Phil Snyder here.
Hey, Phil.
Um, so markets go up and down.
Hmm.
If you're got a project that's going, you thought it was a great deal, but you find out by the time you're ready to sell, the market's now gone cold. Do you hold the property for a year and then decide I'm going to sell at any profit? Or what's the disposition of that property if the demand for the property isn't there? You go hold it on for a longer period of time, or are you going to move it at
So
any
we,
price?
oh no, no, we fluctuate with the price. We're not, dead set against keeping a certain dollar amount. We will fluctuate with the price and come down on price. If it does go over a certain time frame, we try to move it as quickly as possible. And then we take, any and all options that are on the table, rentals. If there's issues with the investor, we'll try and pull money from another property and liquidate you as timely as possible. But generally, we try to get it, a property liquidated between 12. There are instances where we've been over COVID. We had to hold a couple properties. But everybody's gotten paid their principal plus whatever return was owed to them for all investments that we've had.
How many properties have you done in the last 5 years, for example?
5 years would take us back to 21, 25, 125, 150 just in the past 5 years.
Okay. And all those properties have gone through that process that you've sold them off.
Yes. I mean, we have ones that we've done from like the end of last year to this year that we're still in process, but yeah.
So you're using the 90-day, so the 90-day ambitious target for turning over the house and being ready to go to 1 year. That's the time period you've allocated for the sale and closure of the deal. Is that correct?
Yes. Now, keep in mind, that there are things that, might delay it, push it along. That's why we say 12 months to give us the buffer, just to make sure that there is time to sell. We can't control how the market reacts, so we try to give us, ample time to liquidate the properties.
Rob, what is the split actually between working with realtors versus the affordable, home buying program that you guys have set up
In regards to what?
in terms of what percentage is going through straight through a realtor or straight through, I guess the affordable program is a separate, you're not going through the realtor, you're holding it yourself, correct?
Well, it's listed simultaneously. The realtor
Okay,
gets the listing and we get the affordable homes. We haven't worked out with the realtors because I know a lot of people, you might say it's not fair to the realtor. Any marketing cost upfront we cover. We don't let them
right.
cover it. Just God forbid it goes through the affordable housing. And if they have obviously a buyer, they get paid on it. And so
Okay.
they know the structure going into it. We don't just say, oh, we're taking the listing from you. We don't do that.
Right. Okay.
Robert,
Are
it's
you
John
targeting a
Moss.
certain price point?
Yeah,
Robert?
depending on the state, I'm going to keep it at the $600,000 level, 600,000 and down. There, it's we follow the FHA guidelines. Some states are 750 and down, but we try to keep it below 600.
Robert, it's John Moss. I put my questions in the
Oh,
chat.
I didn't even see them. Hold on, I don't see any questions in here. You want to just tell me what they are, just because I can't see them?
Yeah, at year end for taxes, do you give a 1099 or a K1?
Yeah, where we originally started out as a K1, we've moved towards 1099s.
And what's the minimum investment?
50,000. Does anybody else have any other
You provide
questions?
status reports so when we
Yeah,
invest, write you check, do we wait a year to find out what the hell's going on, or you
no,
send
so
out a monthly report?
originally it was that way, but it was becoming a little too much for me to keep, sending emails out and, staying on top of it. And I was, coming in, not on time. But yeah, we give status reports on a periodic basis. We now have an investor portal where you could log into the portal and see, your property, the Zillow listing if it's listed. But there's always a Zillow listing in there. And then you also see how much you put in, the date you invested it, the rate you invested it at, all your investment documentation, and any inspection reports that come from our construction team.
Setting up the LLC, that's something that we apparently pay for the legal fee, or that you
No, no,
guys
no,
handle that?
no, we take care of all that. The legal fees are only for the closings.
Only for the closing. So you guys handle setting up the LLC.
Mhm.
So therefore, this LLC is in your name, basically in the company's name.
It'll
We're
be,
just funding.
yeah, well, I wish it was that easy, but no. We'll set it up. Let's call it 123 Main Street LLC. We'll buy the property within that LLC. We are 95% owners of the LLC. The investors are 5% owners. The reason why it's 5% is to keep it so that you don't have any association to the debt and you don't have any responsibility for the debt, but yet you are a beneficial owner. Assuming we are complete idiots and don't know what we're doing, you could overtake that LLC at any time, liquidate the property, refinance it, whatever you have to do to get your money out of it. But you do have 5% owner of the LLC, and that's where the 1099 comes from.
Hey,
Who does the
Robert,
research? Who does the research out in the field saying this is a good home? This the realtor, or you send someone out to take a look at these?
So we usually do it off of where the properties come from, the MLS, if it's a realtor, whatever the case may be. If need be, we'll send out a realtor to take a look at the property. But we can get a pretty good idea of what a property looks like or how it is just by going on Google Earth. Once we get a little more serious about the property and we're making an offer on it, we'll send a contractor in to go in there to obviously tell us what the scope of work looks like, but also to tell us how much it's going to be from his perspective. And John, I think you had a question as well.
yeah, Robert, is there anywhere on your dashboard like we can see, say the property needs a new roof and new windows, we can see that the new roof went on and new windows
Yeah, yeah,
went
that
in?
That's the inspection reports we give. Within the inspection report is a detailed description of what was done. And when I say detailed, it's usually line by line, and it'll say, new bathroom sink, new faucets, laid down a new floor in the bathroom, or in your instance, put on a new roof, new windows, whatever the case may be. And there's anywhere between 3 to 8 different inspection reports that come out on every property.
How often do we get those reports, Robert? Basically,
Whenever.
I want to track the progress.
Yeah. First of all, if you want to track the progress of a property, if there's nothing in the portal, you could always call me and I'll give you or email me and I'll give you a detailed update of what's going on, and I'll give you the most recent inspection report. But whenever they come out, they could be an inspection report could happen, every couple weeks, or it could happen once a month. It depends on the property and depends on what needs to be done to that property.
Does the paperwork guarantee a return by a certain date?
Not by a certain date. I can't. There's no way I could do that.
Yeah.
Just because we have to sell the property.
You mentioned a certain return. Your typical average return was 15% or something.
That's
If
what we're
that's
currently.
average,
No, that's what we're currently paying, 15%.
that's recurring. Yeah. So
Yep.
so an average tends to have, say, sometimes it's bigger, sometimes it's lower. So what happens when you get a low return on a property? What was the cause of that? What changed that?
So I'll answer that question in two ways. When I say the average, it's what we've been paying since the company started. We were paying out a lot more at the beginning, obviously, because we didn't have, the deals, we didn't have everything in line.
Sure.
And then now we're paying less just because of interest rates, the cost of doing everything, and we're getting a little more, I guess you could say, notoriety. So we lowered it a little bit. Second of all, to answer the question about if a deal goes south, we generally will. All investors have gotten paid back their principal plus their interest, whatever was owed to them. If a deal goes south, obviously it's because it sits on the market longer. If we have to lower the price, there's a multitude of things that could happen. The construction costs are through the roof. We supplement that through deals that are not investor, that have no investors on them, that are our own deals, and that we did them all by ourselves. So we kind of supplement, whatever you would have made off of our deal through something else that we would have done. And at any given time, 10 to 20% of our properties are self-funded.
Yeah.
Robert, do you have a fund where I could give you 50,000 and instead of investing in just one home, I can invest in multiple homes?
We don't currently, but we could have a conversation offline to see how we could potentially make it work for you. Like if you wanted to, spread it out across a couple properties, we could make that. We've done it before. It's not a specific fund, but we could diversify your risk if that's what you're asking.
Yeah.
Is that it? Anybody else have any other questions? All right.
What's the one risk that you faced that you're trying to improve your control over?
Chaos. It's more the construction. The construction is the biggest thing. Trying to get that streamlined. We actually have a department 2 doors down, where we have 3 different individuals in there. There's a construction manager. There's a project manager, which he handles all the actual contractors, what they're doing. He's literally on the phone with them all the time. And then we have a vendor management where he deals with all the different problems that could come up from doing it. So, as much as I say that we have it together, it is chaos, but we try to make it as seamless as possible for you guys so that you guys don't have to realize. And if you've done any renovations in your homes,
Yeah.
I think you'll have a good idea of how crazy that is. But that is the one variable that we would like to make it a lot more streamlined, and, as they say these days, have AI take it over.
Okay, so you haven't solved that problem then. Okay.
Oh, no. I don't think that problem will ever get solved, but we're doing our best to mitigate it so that you guys don't feel it or see it.
Are there certain markets that you will not do any deals in
Oh,
anymore
yeah.
because they're losers?
Yeah. We were in Chicago. We won't do Chicago anymore.
Okay.
There's a bunch of markets that we've done. Baltimore, although Mark really likes Baltimore, he has a hard time going in there. We're in Westchester County, New York. We try not to do it around here solely because of the pricing and the contractors. But there's one town that's I don't know if you know the area around here, but there's a town called Mount Vernon. We will.
Oh yeah.
It doesn't matter how good the deal is. We won't buy it unless they're giving it away, obviously. But just because of the politics that are there. And there's, a multitude of other areas that we won't go into, but yes, there are areas we don't go into.
Thanks.
Robert, would it be any problem for you to pull up the investor portal to show us what we would look at as an investor?
I can't show it to you as what you would see, but I could pull it up from what I see, and it's not much different. I'm actually logging in. I'm going to try and get it to. I can't really show you too much because there are clients' names in there and stuff. And this isn't everything, but you can see a lot of the properties here: California, Blythe, Haldane, Valley, Melba. Let's see if I can go over here. This is really all I could show you because there's client names on a lot of them, so I can't really show it to you. I hope you understand that.
Totally understand.
Yeah, I just realized that as I was logging in. Thank God they didn't pop up. But yeah, so here you see the property, how much was raised, the purchase, the equity, and once you click into it, you could see it's just a detail. If you've ever had a brokerage account or a bank account, you look at it online, you have just your line item, and in there it'll show you your name, the property, a little picture of the property, the Zillow, how much you put in, what date you invested it in, your investment percentage, whatever time you got in. All your investment documents, and then all the inspection reports that go along with it are all in there in PDFs. Oh, wait, I'm not sharing this. I'm sorry. I thought I was sharing this. My apologies. I thought I was sharing it with you, and I was not. Can you guys see this?
Now we can.
Yeah. Sorry about that. I thought you were looking at it before. So here you'll see, here's the property. Here's the amount raised, the purchase price, the equity that went into it, the market value, and then the annual return. This one right here is getting ready to be sold. Blythe. Not sold. We have a couple offers on it. I'm sorry. Haldane's getting ready to get sold. So if I showed you any more, I'd be giving away, too many secrets. Just kidding. Yeah, I don't have a demo version to show you. Otherwise, I would show it to you.
Well, I guess also, Robert, I could go on to Zillow or Redfin and actually look at the pictures of the property.
Yeah. We try to make it, easy so you don't have to go searching for everything, so that it's all right there, right in front of you, for your investment. So let's say I'm just making this up. It's 12:30 at night on a Saturday, and you're just like, oh God, what's going on with that? And you just want to see it. You could log in and see it and have all that information right there, right in front of you. You're in. Oh, there's your questions. All right, I got them answered. Now I am recording this. I am going to be sending it out via YouTube for you guys to rewatch, and then I will also send you some more information via email, so you guys have that as well. If you guys have any questions outside of this, once we end it, please feel free to email me. I try to get any and all questions answered. One thing that I didn't say